Welcome to ESG Decoded, where we unravel the business complexities at the intersection of environmental, social, and governance issues.
I'm Erica Schiller, and I'm joined by my Climeco colleagues, Emma Cox and Anna Stablum.
Get ready to explore the intersection of sustainability, innovation, and ethical leadership, the dynamic forces shaping our global economy.
From climate action to social responsibility, we're here to decode the ESG landscape by interviewing interesting leading figures across the globe that will empower you with actionable insights.
Whether you're a seasoned practitioner or just embarking on your sustainability journey, this podcast is your compass for navigating the future of responsible business practices.
Let's decode ESG together. So hello everyone and welcome to ESG Decoded. It's a pleasure to be back, and this week we have a really interesting guest with us. Welcome to the show, Natasha Garcha, Senior Director of Sustainable Finance at Impact Investment Exchange here in Singapore. Welcome to the show, Natasha.
Very excited to be here. Thank you so much for having me, Anna.
Thank you. So Natasha leads the award-winning Women's Livelihood Bond Series, which has empowered more than 3 million women across emerging markets through innovative capital market solutions. She is also the architect of the Orange Bond Principles. It's a pioneering framework that has mobilized 1.5 billion towards gender and climate solutions, and is now one of the fastest growing thematic bond labels globally. So I'm so excited to have you here with me today. It's great to have you here to talk about these bonds and to talk about mobilizing capital. And I wanted to just mention to the listeners that as we're nearing 2030, I'm actually getting more and more worried about how we can finance the green transition and the enormous gap of climate funding. So here in ASEAN, it's said that we need $3 trillion for climate investments to basically have a chance to reach the Paris Agreement's targets of decarbonization of the ecosystem and the world that we live in. And unfortunately, this kind of money is nowhere to be seen today. So this is why I really am excited to have you here, Natasha, to understand how these bonds work, and maybe if we can even use them for other things. Obviously, we have heard about the Rhino bond, green bonds, and there are other types of bonds out there. But to have someone who's an expert and someone that can really explain what bonds are, I think that's going to be really cool.
Yeah, absolutely. So just thinking about what a bond basically even is think about it as giving a loan to someone creditworthy, a company, a government, a financial institution, and in return, they promise to pay you back an interest and your principal back at the end, right? So it's basically debt in that sense. Now, when it gets really interesting is when you put a thematic label. That means you have a use of proceeds. There's a meaning behind what you're going to do beyond just the interest rate you're going to get paid back. Typically, you would have a label like green or social or blue, and now the newly introduced orange bonds. Green bonds would focus on making sure you're advancing climate action. Orange bonds takes its color from UN SDG 5, which focuses on gender equality. So you have a very clear use of proceeds basically in these bonds. You can also do various forms of structures, which I won't get into, but we've seen orange bonds used by the IKEA Foundation to support Syrian refugee women settled in Jordan, making sure they get capital for sustainable livelihoods. More of a philanthropic structure in that sense. We've seen financial institutions. There's a $1 billion orange fund that came out of Indonesia last year by the world's largest microfinance institution. It's an affordable housing fund in the US, a corporate orange bond in Japan, and IX's own orange bonds, which are multi-country, multi-sector, which empower women both to build economic stability, but also to fight climate change.
Excellent. So that's a good overview, I think, and a good starting point that this is basically what we will talk about today. But first, Natasha, I'm curious to understand, first of all, who are you and where do you come from? Why are you working in this space? And then second, what is Impact Investment Exchange? And I did see on your website that it says we're not an exchange. So if you don't mind, bring us back a little bit from the starting point, basically, of your career. Where do you come from? Why are you interested in this? And are you, just like me, worried about how we can raise big ticket sizes to save our environment and basically for adaptation and mitigation? But please, just a little bit about yourself would be really interesting to know.
So I was born at the foothills of the Himalayas, not very far from an active war zone. And I think for me, it's a region that has such promise and such strong women, I would say, who stand up for peace. And it's always really influenced me in the sense that I've always seen women more as solutions to global challenges than victims. Women are incredible stewards of the land. Women are critical to any crisis. So no crisis is gender neutral, including the climate crisis. Women are disproportionately impacted. You think about COVID pandemic, you see women 1.8 times more likely to drop out of the workforce. But on the flip side, if you add them back in, you add $13 trillion to GDP. You see peace agreements lasting longer. If you have women at those tables, there's a 35% increase in chances of those agreements lasting for 15 years. All of these things really influenced what I wanted to do. And I've always followed this Japanese philosophy called ikigai, which means your purpose. So what you're good at. For me, that was finance. I started my career on Wall Street. What you're passionate about. I've always cared very deeply about gender equality. So I started my first NGO when I was very young, hit a very early quarter life crisis while working at the hedge fund. And then recognize that it has to be something that the world needs and something that you're good at. And so I brought that all together at IIX, the Impact Investment Exchange, where I now lead sustainable finance, really building on my degrees in law, in international relations, and in finance to see how can we actually change not just single markets through interesting transactions, but also how do we change the system. So Impact Investment Exchange has done that very effectively. It started in the early years by designing a social stock exchange, but then quickly pivoted because we realized during the 2009 early years, there was not a lot of social enterprises dying to list on a stock exchange. So instead, we did a lot of work on technical assistance, research, institute, funds, and then our bond series, where we started packaging high impact enterprises where the common denominator was gender equality and wherever possible climate action into these portfolios, and then listing those bonds on stock exchanges. So we actually designed the world's first gender equality bond designed by women where the use of proceeds was to empower other women and listed that on a stock exchange.
And if you don't mind, going back a little bit to these bonds and the fact that it can sound a little bit almost scary for some if you're not from a capital markets background or a financing background. If we talk about the bond again and the framework that you set up, what I was really interested in when we were chatting earlier was that you were saying, when we created these bond frameworks was that we brought in a lot of different stakeholders. And if you don't mind, just really talk about those stakeholders and also when you issue a bond, explaining exactly like who is who in the room and the idea about blended financing as well, because blended finance is obviously something that a lot of people are talking about a lot, but I think few people actually really understand what does it mean. So who is in the room, A, when you created the framework, and two, when these bonds actually go live?
Excellent question. So let me break it down into two parts. First, what does our bond look like, right? What was the precedent for the Orange Movement? Our bonds are exactly as you said, they're blended finance. So what we do is we recognize concessional catalytic capital is very scarce. The age of aid has ended. That era is over. We need to be very strategic about how we stretch philanthropic capital or public sector capital. So what we do in our bonds in the IX Women's Livelihood Bonds series was we have two layers. We have a subordinated debt layer. We've had everyone from the US DFC. We've had Korea's KOICA. We've had also foundations like Minderoo Foundation and the Rockefeller Foundation play a role in that layer. And we have 8 times leverage. For every dollar we get there, we leverage in 8 times more capital from pure private sector investors. And that's incredible. The global average is 4 times. Private sector investors we've got are incredible institutions. We have Nuveen, we've had MetLife previously, we've had APG, we've had some super funds from the Pacific. And we've also had some smaller family offices who just want to play a role in capital markets. And that diversity has always given me a lot of hope because it means that this is interesting for investors from Australia to New York. This is interesting from a small, high net worth individual to a large institutional investor controlling trillions of dollars. And all of these investors, we've had 7 bonds that we've issued to date. 4 of them have matured, and all the senior bondholders have been fully repaid. So they actually got paid an interest at, our last bond priced at SOFR plus 225 basis points. Our bonds are also, the last thing I'll say on blended finance, the importance of this is where countries can really step up. If they are not in a position to focus on aid anymore, they can be catalytic in other ways. So for instance, the Swedish International Development Agency provides a partial guarantee for our bonds. Every single underlying portfolio company benefits from that SIDA Swedish guarantee. And that's really helped us also to attract more capital from and mainstream investing in orange bonds. Our orange fund last year in 2025, when there was so much backlash against ESG, was oversubscribed and got a pricing benefit. And I've seen other orange bonds do the same last year. And that really brings me to, why are orange bonds working? When green bonds have contracted in the last year, when ESG has faced a significant pushback geopolitically and geoeconomically, orange bonds have worked, in my opinion, for 2 reasons. One is, when we drafted those principles of what makes an orange bond orange, we didn't just have banks in the room or investors in the room. We had a civil society roundtable. We had government sector agencies at that table. We had foundations at that table, and everyone's voice was heard. One of the principles actually talks about making sure that you're transparent about your impact reporting. We actually are the only asset class in the world that mandates you have to verify impact with the end beneficiaries. You have to verify with women whether she's getting a solar panel in India or whether she's growing rice in Cambodia. It doesn't matter. You have to verify your impact. And that's a lot of power that you're putting back in the hands of women. And more importantly, this is the second reason orange bonds work, is you can correlate that with risk. And I think that's where impact truly becomes meaningful, when it's not just a nice to have in a pretty report and you're showing photographs of women. That data is influencing capital because it's an early warning signal. If the women aren't growing enough rice, your investment's probably not going to get repaid, and you can do something about it earlier on. That's the second reason. And the third reason is, I think, just plain intersectionality. We had participants from both the global north and the global south at the table. We had people from Japan, Australia, Singapore, India at that table, just as much as we had people from Europe and North America. And I think that's why orange bonds last year, when markets shifted in Europe and in broadly in the West, orange bonds simply took off in this part of the world because we had people who authored them. If you author your own future, you're likely to try to manifest it.
Very interesting. And women in the capital markets have got a special place as well, right? I mean, the fact that women entrepreneurs are finding it harder to raise financing and being supported in the capitalist system that we live in. And I remember what you were talking about as well, that at the same time, women are actually some of the safest kinds that you can have, borrowing-wise or for microfinancing schemes. So you were mentioning something yesterday when we were talking about the financial crisis. Do you mind talking a little bit about women in capital markets and why is this so important?
Absolutely. It's fascinating for me. I come from a Wall Street background originally, and I used to work in a hedge fund. If you have gender diverse teams at hedge fund, they outperform by 6%, which is huge for a hedge fund. It comes back to my original point of, I really see women as solutions and not victims. I don't see this as us trying to just solve for inequality. I see this as us leaving half the population out of solutions, out of the workforce, out of economies, and that is damaging to us as a whole. In capital markets, women play an incredible role because gender diverse teams tend to have broader perspectives. This is not to say that women are smarter than men or vice versa. This is to say, when you have these diverse groups, they will think differently. They have different lived experiences. And I think that diversity of perspectives is what strengthens any investment opportunity. So even when we were writing the Orange Bond Principles, one of the things that we said in Principle 2 is that you have to have women have a seat at the table shaping the investment, the decision-making process, because we know that there will be more stable decisions that are made that will stabilize your returns and minimize your risk, because women do think about things differently. And I think that's been really, really critical for us to see, is that these orange bonds continue to perform. When I was at the hedge fund, it was really fascinating for me because, I worked there during the financial crisis of 2008 to 2010. And, funds were being gated and there was complete chaos on Wall Street, right? At the same time, everyone who was working in microfinance, lending to these low-income women in emerging markets in Asia, Latin America, and Africa, were fine. They were isolated from these global threats. So I think that diversification is 101 for finance. And then when you lend to women, most of the funds which they use, even when I was in Indonesia earlier this year, checking on one of our investments, the women were using funds to build climate resilient homes because they knew they were getting climate shocks in Indonesia, stresses from floods and droughts and extreme heat. They were using their savings to make sure their daughters stay in school and can break the cycle of poverty. And it was just incredible to see their foresight, which how they were using this capital to shape they're really the economic backbone of Indonesia when you think about what these women do. So that's something that I've really carried from my Wall Street days into how I think about women as solutions to date and how they strengthen capital markets.
Amazing. And I wanted to ask you in that sense, because of course, there's always that question, right, between fiduciary duty and impact investment and making money. And can you do both?
Yes, I think you can. And I think it's imperative that you do because for two reasons. One, in the short term, as I've said, we've seen that having a gender lens and very often an impact lens is a fantastic way to reduce risk because you are investing, if you don't have a climate lens right now when you're doing your risk assessment, you're probably not going to think about all the risks that your investment will be exposed to. Take something as simple as investing in an agricultural value chain, right? If you're not aware that adaptation is important, you're going to miss out on something that you could have done to protect your investment. And then in terms of long term, that's when we think about returns. What balance sheets or term sheets are we looking at if they don't factor in the long-term impact of your work? We see the industries that are not doing well are the ones that are damaging ecosystems and damaging communities or ignoring them altogether. These investments that are either gender blind or blind to climate. And I think that myopia is something that affects the long-term value that you create. So if you're a corporate, that long-term thinking is critical. If you're a financial institution, the short-term risk mitigation is critical. Either way, whatever lens you take, I think having impact helps you maintain those returns. In fact, during COVID, all of our bonds performed just fine. As I mentioned, the 4 bonds that we had, and we did 3 of those during the 2020, 2021, 2022. All of those bonds, we have repaid our senior bondholders in full. And I think that is a testament not just to our financial structuring capabilities, which I hope are good, and the blended finance always helps, but really to the women at the last mile as well.
And it's something that you've been talking about and touching on here is that intersection between climate change, women, and we've even mentioned war while we were talking the other day. How do these 3 things kind of interlink and why do women play such an important role when it comes to climate change? And again, if you can touch on even the war.
So I'll take a reference from my recent book, which I just published. So it's called The Athenian Edge, and it focuses on gender equality and climate security. And it's called that because it takes you back to Greek mythology. There is Athena, the goddess of war, and then there's Ares, her brother, the god of war. And both of them try to win in very different ways. Ares is about brute force and bloodshed, right? Athena wins purely with strategic wisdom. It's incredible. And you see so much of that translate when you have gender equality. Again, not saying to replace all the men with women, but when you have that true equality. So I ran a regression analysis as part of my research at Harvard to see what prompts a state to go to war with another in light of the pressures of climate change. Yes, more than 60% of our wars are being fought right now over water, energy, and land, all pressured by climate change. It's the biggest threat multiplier to war right now that we have, unfortunately. And no region is immune to it. So it was fascinating because, I ran it for everything, religion, not a factor, latitude. Well, we're sitting here in Singapore, one of the most diplomatic green nations in the world. So it's not just about, countries like the Nordics, which are, fantastic at this. Ran it for wealth and GDP, more of a, bigger factor. Democracy, as you can see in the news, not always a predictor of whether a country will or will not go to war. So it's a predictor, but not a stable one. The greatest predictor was gender equality. And I found that just fascinating because when you research it, it is a combination of a number of things. But, some of the things that stood out to me is one is how you treat someone who is a penalty-free target at home, who you perceive to be weaker at home or in your local communities, is how you will treat a state who you perceive to be weaker than yourself. It's very telling of how you think about gender equality in that sense, and equality and justice in general. And then the second was, if you're leaving half of the population out of the workforce, the half that has the most to lose at times of war, they're not the main combatants, but women are the main victims of gender-based violence and other issues. That is the obvious reason why, peace agreements and other forms of diplomacy are damaged. Women are excellent negotiators. They are better at compromise. There's a story from Sudan where there were two warring factions fighting over control over land, and the woman serving tea realized that they're fighting over control because there's a river there, and they both want to control water because water, sadly, these days is a human right that is weaponized. And she says, I'm sorry to interject, but the river has dried up. And she knows this because women spend 250 million hours a day collecting water. Men, about 1/3 that amount. So it's those unique insights and lived experiences that women bring to the table that make them so critical for climate security, and especially when the two are converged together.
Right, that's interesting. And it's good to have numbers on it because it's something that we can often think about and consider, but to actually do a proper analysis on it, I think that's well worth reading your book just for that particular chapter to better understand exactly what kind of numbers that and data that we have to back this up. I wanted to just ask you again, going back to my worries about financing this green transition where I started off, and how can we get more big money come into this space and using the bond system and the bond market? What do you see that is needed to happen to scale these orange bonds or even green bonds, but to get more large financing coming? And you were talking about, the private investors that you're able to pull in, because that's a little bit of the money that is still sidelined. How do you think we can actually scale this work?
That's a fantastic question. And, that's the golden question, right? How do we mobilize meaningful and scalable capital? So thank you for bringing that up. Let me frame it in this way. I see there's three main silos we need to break to do that. The first is the silo between finance and policy. We can't afford to be speaking different languages. I've worked on Wall Street, and now I have the great privilege to work with a number of governments and UN bodies and so on and so forth. And everyone thinks they're solving it, and the other group is creating the issue. And we can't afford to think that way anymore. It is critical for us to collaborate at this point. Even in the book, after the regression analysis, it's sort of like, that's interesting. So what? There's a framework that offers complementary finance and policy solutions because, for instance, you can't have green and orange bonds going out in the market if you don't have, a strong, say, carbon market background. You need carbon markets for, say, trading. You need to have blended finance going out, but you need the kind of policies that will regulate that, but will ensure that governments have the ability to have things like what Sweden is offering, a guarantee program. And that's where maybe the evolution of their aid programs. If we have these sort of parallels, we will have so much more capital mobilized, and policies will be more than just paperwork. They will actually be implemented. So I think both groups need to break that silo. The second big silo we need to break is the one I've alluded to earlier between risk return and impact. Impact being a nice to have report on the side no longer works. Outsourcing impact to another firm to analyze it no longer works. Institutions have to internalize how impact data can influence investment decisions, and recognizing all these factors. The regression analysis that in my book is just one of many data points that show how a stronger impact actually influences better risk and return, as we're seeing in our orange bonds as well. And then the last piece I will say is that we have to break the silos between orange and green, between gender and climate. There is an approach of either or that they will compete with each other, which is simply not true. There's no country in the world that is going to achieve net zero if half the population is left on the sidelines. There's no just transition if women are not included in it. There is no way that we are going to have climate goals achieved when we don't have the benefits of these unique lived experiences. Women spending 250 million hours a day collecting water being just one of many. I think we are leaving solutions on the table by leaving these people out of the design and the implementation and the ultimate benefits of the solution. So it has to be climate justice is very key. And the reverse as well. Women are disproportionately affected by climate change. So even from a rights-based approach, they should be part of solving solutions and taking things into their own hands. So whichever way you look at it, I think that's a critical silo to break. Our best investments, and there are many orange bonds, like I mentioned, but every time IEX does an orange bond, we always make sure there's a green lens. For us, if we're investing in agriculture, it will be climate smart agriculture. Women farmers will get access to some sort of climate resilience training, because most of them in emerging markets, sadly, are prone to droughts and floods. Similarly, we will do carve-outs. If we've invested in mobility or vehicles, there will surely be electric vehicles. So however you look at it, you can always build in a green lens. And I feel vice versa, you can always build in a gender lens.
Yeah, I can't help but think that these are very wise words, and it's interesting to maybe end at this point, because it feels like that was a nice wrap up of our conversation today about the orange bonds. I know that you have a very busy schedule ahead. I don't know if you want to share with the listeners a little bit what you're working on now and what we can expect to see coming up.
Absolutely. So we are in the midst of closing more orange bonds, which is extremely exciting. You can watch for news from IEX announcing more deals being closed. We are expecting by the end of this quarter, total orange bonds in the world issued will reach 2 billion, which is fantastic, over 1.5 billion just at the end of last year. This is exponential growth that we're seeing. And then IEX has also announced last year a $1 billion Orange Climate Fund, which is fantastic. It's still a debt fund, but will give investors a lot more flexibility if you're not accustomed to traditional bond structures. And then finally, I'm very excited about the book launch, obviously. This is a wonderful way to share years of research, a decade of working and then researching all of this at Harvard and Oxford, making sure that insights don't just stay on paper, but are shared with the world as they should be. This is an unfortunate time where we are seeing the highest level of war since World War II, and anything me or IEX can do to be part of the solution, we are deeply honored. And thank you for the space to talk about this, Anna. We really appreciate it.
Yeah, thank you so much, Natasha. I really, really enjoyed listening and hearing more about both the research that you've done into this very important topic of gender equality and climate change, and of course also to hear that you are mobilizing that important capital that we absolutely need at this point to do more climate mitigation and adaptation. So thank you so much for joining us, and good luck with the book. And I hope I will see you around very soon. Thank you so much, Natasha.
Thank you very much, Anna.
Thanks for tuning in to ESG Decoded. We hope this episode has inspired you to take action in your own ESG journey, stimulating ideas for partnership and innovation.
New episodes drop bi-weekly on Tuesday morning. Subscribe now on your favorite streaming platform to stay in the loop.
Join the conversation on social media using @ESG Decoded or visit climeco.com for more resources.
Until next time, keep decoding, keep innovating, and keep making a positive impact.